Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, September the 20th. The year's 2019. Let's talk trading. Weekly wrap up. I hope everybody had a profitable week this week, and I hope you used your money in risk management and that you did not have a trade that lost more than you were willing to lose on a trade. For the week, we've got two that failed to fill the weekly gap. But that happens sometimes. We don't always run the table here, and that's okay. As far as the dollar yen, you see for the week, we broke out of the previous week's high, came down through the wick zone, and now are below the weekly close of last week. So this is interesting. We have a green candle, but we're below the weekly close of last week. Don't see that too often. Normally, if you have two green candles in a row, the second candle closes higher than the close of the first candle. And just notice here, off of the week, you can see this is the close minus the weekly open. You can see the movement. So this shows, once again, trading using that weekly open or the weekly buy zone. Trading using the first day of the week, you can see the types of ranges, but that doesn't even say what high minus open is. I think we might have that on another chart. For the day, we open below the previous midpoint, and it's a down day at the moment, or still up for the month, still up for the week. But you can see we are 171 pips below the yearly open. As far as the week here, you can see this was the first day of the week. We poked above it twice, and now we dropped, and we're going to close, looks like close within that first day of the week. So next week we'll have a new first day of the week, and we're still 154 pips above the high of the opening days range here, the monthly opening range. Still below June and July, but we are above September, and we're below August and all the rest. As far as the range goes, we're still above the low of June, above the low of August, and way above the low of September. Inside bar off of the daily, you can see here we're still not anywhere near it, and we're not going to have an inside bar here either. But we do have one on the euro. Might want to take a quick peek at that. You can see yesterday was an inside bar break, so far giving up 16 plus the 11 off the low. So you may have a potential of making about 27 pips there. And dollar Canadian, you can see we have the inside bar, but we did not move outside of it. But we did have a monthly inside bar from last month, and it did break above that monthly inside bar high 1, 2, 3, 4 times this week. Once again showing these types of trades can be profitable. But remember, boys and girls, fellow traders, these videos are for educational purposes only. Your results may differ from mine. Forex trading, as all trading, is very risky. So if you need advice, seek it from an accredited financial professional. That way, when you lose your money, it was lost by an accredited financial professional rather than somebody that you listen to off of YouTube. And the day we have, let's see, 3, 4, 5, 6, 7 pairs over 100, with the pound pairs here putting in over 100 pips, except for the euro pound, only 59. You can see the yen just 31, and my other favorite, the euro yen, at just 66. Now, if you don't trade the yen, you don't like trading the yen, and you wonder, why am I just doing the yen? Well, last month somebody said, hey, do a different pair, and I did the euro AUD. But the reason I like to stick with one pair, especially during the videos, especially month after month, is for many reasons. One, to show you don't have to switch pairs to be profitable. Two, to show you that some days are going to be better than others, and you don't have to switch pairs just because that's one day isn't so profitable or doesn't really give you many trading opportunities or much range. Three, to show you that how you can use the various methods with that pair. Of course, some methods work better with other pairs and some don't. But the main reason probably is to show you I am not cherry picking trades. So if one day there's really good things on the euro dollar and I show you that, then the next day everything's really great on the pound dollar, I show you that. I never show you the days when things aren't so great. So this way, even if I wanted to do it, I really can't because I've kind of, it's like, no, I'm sticking with one pair. And, every now and then I might flip a chart to a different pair if there's something came up I really wanted to show you. But, the meat and potatoes is in the method, in the consistency, in the repetition, because as I've stated before, we have to have the repetition because then you get competent. Then as you have success, it builds your confidence. And it's an upward cycle as opposed to a downward cycle. The other thing, one other factor is by trading the same pair, I take away a variable. I'm trading the same pair every day. So I'm going to get the good and the bad along with the average, as opposed to if I flip back and forth between pairs, I might miss the good one day on that pair, and then I flip to another pair and I miss the good the other day on something else. But this way, I reduce one of the variables, and so when the yen has a really great day, I'm right there. Of course, there are ways to find what's having a great day. That's one of the reasons for the dashboard. But I just wanted to clear that up, especially for people just now tuning in. So I always suggest you pick one pair and you stick with it. At least for a solid month. You pick one method, you stick with it. One pair, 1 month, one pair, one method, a solid month, and then you can report back and just see. And if it works, you might not ever switch. Okay, here we go. Buy zone. The buy zone was just above, or the pivot was just above the buy zone. No real bias. Short trigger here was either a scratch or a loss. Here we had a short trigger, paid off. Here we had, let's see, those are all green candles, so those weren't really triggers. We had a short trigger here. That was probably should have been scratched because you see it didn't make a new low. It didn't even get past any of these lows, so that's a scratch. And then we never got back into the buy zone. Here, one more short. Once again, failing to even get to this point. So right there, that should have been a scratch. Oh, and a lot of people talk about hairy hindsight, but see, the reality is you can't make a profit on a closed candle. I was talking to a trader, I believe, last week, and we were talking about that. So, yeah, this is all the past, but the thing is, we know what the trade is before it happens because we know what the method suggests. And, once these horizontal lines are placed, with the exception of the future pivot point, they stick. They don't move. And then, of course, the VWAP will move too. But normally the VWAP's a squiggly, but I just plotted it as its current position. Rat zone, yeah, these can move because you can make a new low or a new high. not enough room. You can see the zones overlap, so no real rat trading here. On the pivots, waiting on a tick. You can see we didn't even hit the pivot, so we got another open pivot here. Right there, open pivot. So you can see 4 missed in September, but we hadn't missed since the last day of May. Looking here at price action, when you only have 31 pips, there's really not much price action, but the same rules do apply. 3 ball at the bottom, you want green at the line. 2 ball at the top, you want red at the line. 1 ball at the bottom, green at the line. Pro trade. And the reason I say pro trade is because if you're new, you don't want to trade on the candle that's producing a 1, 2, or 3 ball. You want that candle to close. And we're solidly in the wick zone. We were in, then we were out, in, slightly out, back in, slightly out, back in the wick zone. As you can see here, tried to break through the previous day's low. Not much doing there. And it's noon, 12:30 over in New York, so the traders, I assume, are out to lunch because there's not much price movement. And you can see that here, getting a short trigger on the Einstein line. Oh, not ready for that yet. You can see we've got the rat zones overlapping along with the wick zones overlapping. This is definitely a range-bound day. As you can see, not many. We're going to have to take out a high or a low sometime soon, it looks like, unless we're just going to stay here and create another inside bar on the H1 chart. As far as the session opens, you can see we started here in Australia, moved up Tokyo, back down through Australia, coming back up through London, back up through Australia. My time is just the out 1400 clock. I like the trade off of here. And then you can see we had the New York Open 1 hour after my time. For the range, for the day 31, for the week 103, under the average in both cases, for the day and for the week. And showing you the weekly buy zone here. You see on that very first day, we started out, we dipped back in and made a huge move. And I hope somebody profited, because what we were looking for was to, this was the close, so we were looking for price to close that gap. So that pretty much wraps up the week, fellow traders. We had FOMC this week. I hope you had a profitable day too. So think about it. One pair, one method for a month. And let's see, next week we'll be going into the last full trading week of September. So maybe you can start focusing and practice next week, and then maybe next month, October, you can pick a pair and stick with it and let us know how you do. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. Have a safe weekend, and we'll see you next week. TheRumpledOne signing out.